Hello friends, in this video we'll try to understand the concept of joint venture. Right? What is joint venture? See, joint venture is a temporary partnership for a short period of time. It is a temporary partnership. With an example, I'll try to make you understand. Suppose there are three civil contractors A, B, and C who are undertaking contracts and doing construction work, right? So A is an independent businessman, B is an independent, C is an independent firm, right? All the three are independent legal entities. They are operating at their capacities, various capacities at different levels, right? All are in a same profession, civil construction. Presume that the government wants to give a contract of construction of a big dam, right? So the company A wants to take up this contract and to deliver the contract, to complete the contract. But company A feels that I am individually not capable enough to undertake the entire big contract, hence I require some partner, right? So A approached B and asked B, presume that we got a contract, I got a contract with the government to construct a dam, but individually I am not capable enough to take care of this contract. Hence, why don't you come together with me and we will continue, we will collectively execute the contract, all right? And we will share the proceeds, that is profits of the construction work, that is business. So here what is happening? To undertake a big contract, the contractor A and contractor B comes together and forms a joint venture, and completing the work. In the sense what? They are coming together for only one task of construction of dam, and they are doing their individual contracts at their individual level besides this, right? So for this contract they are coming together, right? So they are coming together for only this contract for the period until this contract is completed. Till this contract is going on, these people are called as co-venturers. Once it is done, they are again individual people. So that's the reason why I am trying to say that the joint venture is a temporary partnership between the co-venturers to execute, to deliver a particular joint venture. Clear? So until this contract is till this contract completed, these people will be partners. After that, they will not be partners. So this is the basic crux of the joint venture. Clear? So see, individually these people are free to form joint venture. Suppose there may be another contract B and C collectively taking up simultaneously, right? Besides, B is doing his own, C is doing his own work, A is doing, so particular task these people are coming together. So that's the reason why it is called as joint venture, and joint venture is a temporary partnership between the co-venturers. Clear? So this is the basic crux of the joint venture. I hope you understood. Now, in this, what we have to do? We need to do accounting. So here we have three methods. One is accounting should be done based on when separate set of books of accounts are maintained. Second, when no separate set of books of accounts are maintained. All right. Now, in this video, we will understand the separate set of books of accounts, and the third method is memorandum. joint venture method, right, which is similar to the second method, right? So we'll discuss later these three methods we have in our syllabus. So first we'll discuss when separate set of books of accounts are maintained, what will be the accounting treatment, right? See what is happening when separate set of books of accounts are opened. Here, for the execution of this construction of a dam, this A and B, A is maintaining his own office, B is maintaining his own office, right? They are individuals doing their individual businesses. Besides that, they have come together to execute the construction of this dam. So what these people will do, because this dam construction will take at least 5 to 6 years, is a big contract. So what these people do, they will open one office collectively whereby they will employ the manpower, especially engineers, accountants, supervisors, right, and clerical staff, right? So they will maintain this office. So here in this office they will maintain the books of accounts of only this joint venture of the construction of a dam. No other books of accounts will be maintained. So this is called as separately they are maintaining the books of accounts for this joint venture. When we are talking about the separate set of books of accounts, we will open three accounts. One is joint venture account. Another one will be a co-venturer's personal account. And the third one is joint bank account. So we are opening three accounts. One is joint venture account, co-venturer's personal account, and joint bank account. As I told you, it is a temporary. Hence, we don't maintain all the books of accounts, right? We will be doing all the accounting routed through these three accounts only, right? So basically trying to understand joint venture. What is joint venture account? It is a nominal account. It is a nominal account created to ascertain the profit or loss incurred on the joint venture. Then co-venturer's account is a personal account created to open to understand and calculate how much amount is payable or receivable from a particular co-venturers. Then joint bank account is a real account and it is open to maintain the record of income and expenditure account and makes the payment through banks, right? So these are the three accounts will be opened, and the purpose of these three accounts is, one is calculate profit, second one is calculate the amount payable or receivable, third one is make the payments and receive the amounts. Clear? Then the most important thing the student must understand here, journal entries. Very, very important, right? So journal entries. So in case of joint venture, when separate set of books of account open, what kind of a journal entries will be passed, right? So here, as you are already aware that the joint venture account, joint co-venturers account, joint bank account, and the purpose of these accounts, right? So first of all, what will happen? These co-venturers will contribute the money for the joint venture, and that money will be deposited in joint bank account to meet the expenditure of joint venture. For that, when contribution made by co-venturers, the journal entry would be the joint bank account data to co-venturer's personal account. In the sense what? A account and B account, suppose here. Clear? So when amount is contributed by co-venturers, joint bank account data to co-venturer's personal account. Once the amount is brought, deposited in the bank, then these people will start incurring the expenditure, right? For expenditure incurred or purchase of material or purchase of payment to labor, anything, the entry would be, this will be the expenditure, hence it should be debit. What is the personal nominal account purpose? to calculate the profit. So when we wanted to calculate the profit, expenses should be debited, income should be credited. Hence, the entry would be joint venture account data. So what we are incurring expenditure towards joint ventures. Hence, the amount would entry would be joint venture account data to joint bank account. So we are making the payment through bank. Clear? So joint venture account data to joint bank account. The second entry when we make the payment. Right? For this entry would be for making the payment, purchase of material, making the labor payment, right? Any payment. Suppose any material brought or any payment made by co-venturers. If suppose co-venturers making any payment or any material if they are bringing. In such a case, the entry would be, it should be debited to joint venture. There is no doubt. Joint venture JV account data to co-venturers personal account. So it should be credited to co-venturers personal account if any amount paid by the co-venturers, right? Suppose if any, then contract price received. Once you receive the contract price, then the entry would be, that price may be in the form of bank, maybe in the form of shares, presume that. So the entry would be joint bank account data, shares, debentures or anything, account data to joint venture account. It should be credited to joint venture as it is a income for the joint venture. Clear? Now, any balance of material available in the joint venture, if it is taken over by co-venturers, any co-venturer is taking over the leftover material, then it should be debited to co-venturers personal account. Then the entry would be co-venturers personal account data to, it should be credited to joint venture account. Clear? So these are the basic journal entries. Clear? Now besides this, once these entries are over, then if any asset is taken over, shares are there, shares account we have specifically opened. Suppose if shares or debentures are taken over by co-venturers, right? Or it is sold. So when it is taken over by co-venturers, it should be debited to which account? Co-venturers personal account. So the entry would be co-venturers personal account data to shares account. Right? The difference, either debit or credit, difference should be transferred to joint venture account. Suppose if the share value is 1 lakh taken over at 80,000. So difference we are coming on the debit side, that should be transferred to joint venture account. So the loss will be transferred to joint venture account. If the balancing figure we are getting on the credit side, it is profit. Suppose 1 lakh value of the shares were taken over at 1,20,000. Then the 20,000 is the profit. Therefore, co-ventures account data to shares to joint venture. It will be credited in joint venture. Clear? So like this, we need to pass the journal entry. Suppose if the shares are sold, then joint bank account data to will get the money to shares account. It may be shares, it may be debentures, anything. Clear? Now once this is done, we need to close the joint venture account and find out the profit. If profit, the entry would be joint venture account data to co-venturers personal account. Which account? Co-venturers personal account. So if profit we get, joint venture should be debited, it should be transferred to co-venturers personal account. If loss, this entry is reverse. If loss, this entry is reverse. That is co-venturers personal account data to joint venture. Clear? Then once this loss and profit should be transferred to which account? Co-venturers personal account. And we will close the co-venturers personal account and calculate the amount payable. Calculate the amount payable. Suppose we get some amount payable to the co-venturers. Then the entry would be co-venturers personal account data amount payable to joint bank account. How we will make the payment? through joint bank account for the amount payable to the co-venturers. Right? So once we close, first we need to close joint venture account, ascertain the profit or loss. Profit joint venture to co-venture's personal account, loss co-venture's personal to joint venture. Then close the co-venture's personal account and ascertain the amount payable to the co-venturers. Then the entry would be co-venture's personal account to joint bank. So in joint bank this amount will be credited. Ultimately, finally our joint bank account should tally. In the sense we are right, otherwise we are wrong. So like this we need to simply work out the problem. So which method we are doing? When separate set of books of accounts are opened. Right? Now so now I hope I made you understand this concept. Right? So this first method concept, then I'll work out the what we call problems in the next video. Right? I hope I made you understand. These journal entries are very, very important. Then we'll prepare the ledger account based on this journal entries. Right? Thank you very much. Do subscribe my channel and motivate me to make more qualitative videos. Thank you.